401k loans are attractive because you don't need to have good credit and you pay interest back to yourself instead of a creditor, basically your own bank. As good as it sounds, though, the truth is that 401k loans can have serious negative tax consequences now and cost you money and opportunity later in retirement. And that's what we're getting to in today's video. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, we're discussing what you need to know before you take out a 401k loan.
Yeah, Michelle, stats show more and more people are taking out 401k loans as they try to combat the rising cost of living, this high inflation, right? According to Vanguard, half of 1% of all their 401k participants, and that's like 5 million accounts, took out a hardship withdrawal last October alone.
Not surprising.
Yeah, highest since 2004. No, okay. And there are also people who take out a 401k loan for maybe like a down payment for a house or fund a new business. Either way, just because something looks good on the paper doesn't mean it's always the best choice.
No, it does not.
No, and in nearly 25 years as a financial advisor, I've seen people get so focused on the cash that they're going to pull out that they overlook the potential problems a 401k loan can cause, including double taxation, which is a shocker for a lot of people and something I'll get into later in this video.
All right, so let's begin at the beginning then. What's the first thing that people need to know about a 401k loan?
First thing you need to understand is that not every 401k plan has a provision for a loan.
Okay.
So your first step is to check with your plan provider or your HR department. Your employer may not allow a 401k provision, loan provision inside the plan. So just remember that.
Okay.
Second thing, if you've had money in an old 401k, like with a previous employer, you can't take a loan out of that one. Okay. There's no way for you to pay it back. So if your current provider does allow for a 401k loan, IRS rule states you can borrow up to what your plan allows, which is typically 50% of the vested balance or $50,000, whichever is less. So if you have like $75,000 in your account, Michelle, you can borrow up to half of that, or $37,500, providing that all that money is fully invested, meaning that it's your money to keep if you quit your job tomorrow. So you need to check with your plan provider or employer to see how much you actually have invested. And your statement may show it. Some do, some don't.
So check with your plan provider to see how much you have vested. Yeah.
Okay. Another thing to be aware of is that while there are a few exceptions, you must pay back 401k loans within a 5-year period. And when you pay back that loan, you have to pay back the interest, which is a good thing.
Sure.
Think about this. Like you said before, when you borrow money from a bank, you pay the bank interest. But when you borrow from your 401k, you're paying the 401k the interest back. So kind of like you're the bank. So
got it. Okay.
That's a good thing.
So question, if you were able to take out a 401k loan and you can pay it back, or you think you can pay it back in 5 years, is it a better choice, I should say, than taking out a regular loan because you are your own bank?
Well, it sounds good in theory, but this is where people miss the mark. And when they do, it can cost them quite a bit. So,
okay. All right. So then I guess next step is let's get into the downside of taking out a 401k loan and what investors need to know before making that move.
Okay. The first one is, what if there's a big life event that you don't foresee happening, like you get laid off?
Sure.
If you can't pay back that loan right away, you'll be subject to taxes on the outstanding balance and an early 10% withdrawal penalty if you're under 59 and a half, because it's considered a distribution at that time if you default. So, and that means it's taxed as ordinary income. And there may be also any other fees that may be involved if you actually default. Now, if we go back to the Tax and Jobs Act, which is the TCJA, which was passed in 2017, 401k loan borrowers have until the due date of their tax return for the year of distribution to pay it back. But if you cannot repay the loan balance in the mandated time frame, the loan will be treated as an early withdrawal or a taxable distribution. And think about this. No matter how well your intentions when you took out that loan, we don't know what will happen.
Right.
Most people take out 401k loans, don't have the emergency savings they need to cover the loan in case they risk defaulting.
Okay. So just really, I have a quick question. So if you are, let's say I take out a 401k loan, I took out a 401k loan a year ago, and today I was laid off. Does that mean that the loan is called in and I have until the next
No.
Or it just means it doesn't. It's not how it
No.
works. Okay.
Yeah, that's not how that works. What happens is, here's the scenario. When you get back to work, first of all, you're not at work, so you can't take your payments and pay back the loan out of your
Right.
unemployment.
Okay.
Okay. So you need to be back to work to be paying them loan payments. Okay. So you just have to be careful on that. Usually, layoffs are short term, but here's the issue. What about in 08, 09 when there was layoffs, but then there
Sure.
was bankruptcies? And like right now, we just
Right.
had a couple companies announce bankruptcies. Well, if you had a 401k with a loan out, and let's say it was December and the company filed bankruptcy, you had a loan out. Well, guess what? The company's no longer there.
Right.
So you can't pay back the 401k because you no longer have a job, right?
Okay.
So
Okay.
now it automatically defaults to it's due.
All right. Okay. So if you can't pay back the loan right away, you're subject to the taxes and the on the outstanding balance and the early 10% withdrawal penalty if you're under the age of 59 and a half. But
Right.
if you're 59 and a half and over, there is no penalty, correct?
Yeah, that's correct. If you're 59 and a half and older, there is no 10% penalty if you can't replace the funds that you borrowed.
Okay, got it. But taxes will still be due. And on that note, let's talk about taxation. So you mentioned earlier, most people are shocked to find out that when they take out a 401k loan, they're taxed twice. Let's walk through that.
Yeah, that's right. And there's a lot of confusion around this
Sure.
because this is, to some people, this is considered a myth
Yeah.
because a lot of companies have disputed it, like the Boggleheads. There's a article out there. They talk about it. And a couple other big finance bloggers have talked about, oh, that's not true. And that's why there's a lot of confusion around it. So because, you borrow money with pre-tax dollars,
Right.
okay? Because you contribute your 401k pre-tax, and now your repayments are made with after-tax dollars.
Okay.
But as this is kicker, when you take out money for retirement, you're taxed on the distributions at your ordinary income rate. This means you're taxed
That's
twice.
twice.
And they dispute it. Some people dispute it, but once again, when you use after-tax dollars to pay off the loan and you withdraw them same dollars in retirement. So you just got to be careful with that. So
Okay.
another downside is that when you take a 401k loan, you're also shrinking the dollars that work for you. Okay. That compounding effect of long-term growth, you run the risk of having less income in retirement.
I think this is a big one, and I understand if you need the money now, you need the money now. But
Right.
pulling from that from your retirement savings, it eats away at it, and
Exactly.
it will be a big deal later on, especially since the one thing that is almost as certain as death and taxes is the rising cost of healthcare and the cost of living.
Yes. And for most people, their 401k is the largest asset they may ever have, besides
Right.
their mortgage, okay, or their real estate. You need to take care of it like you do your other assets, like your jewelry, your guns, your collector car. Spend time with it, learn about it, get focused on contributing to it first. Your future retirement may thank you.
Amen. All right, we're going to put a video below in the description and in the pinned comment on how to protect your 401k and 5 things you need to know to protect your retirement. That will be in the link below. Do check that out. Also, if you like the content of this video, hit that like button. Help us grow this channel. Share, comment, and don't forget to subscribe. Brian and I put out videos daily now, so help
Yes,
you
we
make
do.
the best financial decision possible for your future. All right, Brian, anything else you want to say before we wrap this up?
This is your retirement. Be careful with every move that you make in it. So
There you go. All right. Thanks, Brian, so much. And thanks to everyone who watched.
thanks, everyone. Have a great day.